Honestly, this is probably going to end up making us quite a bit of money here on the channel, specifically with futures and stocks overall. What we're going to talk about was what happened here on the beginning of the week. Now, this is where we started here on the Nasdaq, around 13,000 flat. We remember at the end of the week, we were kind of getting rejected, testing that key level. Now, going into this week, I said if we claim 13,000, what was going to happen? You're going to start the ascent towards 13.5, and that's ultimately our clear-cut target, 13.5 to 13.6. We're going to get into exactly why here in a second. But we also need to break down what's happening with futures before we can even give out targets or giving out specific ranges. So going specifically in this week, we had quite a bit of information being given to us, job reports, overall GDP revisions, but then you had the whole China fiasco starting up. Now, if we go back to Twitter, you can see basically a summarization. Blinken says China's actions are significant escalation. And then you go over to the overall interview that was had with Blinken, what he said. I'll link this down below so you can read over this. But he basically said Saturday that China should not hold hostage talks on important global matters such as climate crisis after Beijing cut off contacts with Washington in retaliation for the U.S. Speaker Nancy Pelosi visit to Taiwan. Now, people also in comments were saying that none of this was really over Pelosi. Again, before we go any further, I have to ask you to consider doing two things: liking and subscribing. I'm making videos every single day, so you know how to be prepared for the market. You're getting all the key data, which we're going to go over here in this video, and you're going to be kept up to date so you're never missing out on the big opportunities. So make sure you're liking and subscribing. And the Facebook group is down below, absolutely free as well. Let's get to it. I'm just here to tell you what's happening, things that are sparking interest in geopolitical climates, and things that are going to affect the market. That's what I do here, okay? So whether you disagree with what the news is saying, please, I kind of just don't care. I'm here to tell you what's happening with the market and how I see us moving. You also need to be prepared for this week, specifically Wednesday. What's happening? CPI. Yes, it's already that time once again. So we have our month over month, which has been choppy nonetheless, but they're anticipating massive cuts to CPI, which I might add, if you come out anywhere near forecast at around 0.5%, in my opinion, you're going to be pretty bullish. So if you come down to 0.5% or lower, you're looking really great. It's worth mentioning that you continue to beat on CPI, which is CPI is going up. That means inflation is continuously rising. So they're expecting inflation to have a sharp decline. This is just what they're expecting. The big one's going to be year over year. This is going to really just tell you where our inflation is at. You can see that we overall rose from 8.3 was a forecast on the previous in June to 8.6. Then in July, we had 8.8 and we rose again to 9.1. So we're still rising faster than they can even anticipate, but they do anticipate we're going to see a sharp decline this quarter or this month overall. So keep your eyes on that. That's going to be the biggest thing, basically biggest news on the week for Wednesday, CPI. Make sure you're watching out for that. And it's pretty much going to give us a good look into what's going to happen with GDP next. So this is going to be our only indicator with the revisions to come on GDP. So going back overall to futures and what's happening here, I want to just a little bit of a bigger time frame, but I want to highlight things before you even get into the overall targets and how I see us moving going into Monday. So what happened here? So beginning of the week, you have that kind of stagnation. You're pushing up. You test 13.1, 13.1, 13.1. Now, you come up multiple times, you test. And we had some bad news coming out every time it seemed like we were breaking above. You had the Taiwan things, and then I believe you had the revision of GDP right here as well. Now, you eventually break through, and let's see the important factor here before we go further. So when we're looking overall at this chart, the thing you need to be looking at are your highs that you're trying to make. So what's happening here? So we can see, obviously, out of the gate, our 13,000 is going to be a key overall level of support now. But also looking, this was a resistance and then flipped into a support. What do I mean? You break above, you retest, and then you shoot up. And then what happened on this week as well near the end of the week on Friday? Spoiler alert, you get a double test here on the 4-hour, pre-market and then during market hours, bouncing once again. We're going to get into the S&P futures here in a second as well. But overall, this is extremely strong and encouraging behavior for more potential upside based only on the technicals. So again, if you're looking to become any type of quote unquote bear on the market, you would at least have to break below 13.1. Until you break below 13.1, in my opinion, puts just aren't worth it, or betting to the downside or shorting the market. I just don't think there's value on those plays if you can't even break below your previous highs. So what we're going to do really quick is go over to something like the 15-minute and show you here as well on Nasdaq. I'm going to go over ES as well. You can see, so you were making lower lows and lower highs as well. But then at the end of the day, you broke that downtrend at the end of Friday and you got back above, which again tells me you are looking strong once again. And you also started to mount behind those previous lows that you were forming. So again, theoretically, if you're looking at a stock, what you're looking for is this is your previous low that you had, looking for a break below, a retest, and then possibly shorting at that level for that rejection to the downside. But we didn't see that rejection not once. You would come down through, bounce right through it again, come back down, bounce right through it, not respecting, and then actually ending up mounting it right here and pushing back up. So again, you look strong once again. I also have people mentioning the RSI and MACD and things like that. Now, before I go any further, I want to highlight these things really quick. I actually put it on here just so everyone can see it. Now, when you're using something like RSI or MACD, it's not that they're terrible indicators, but using them on a short-term time frame is going to be an absolute waste. If you're going to use these, the only value, in my opinion, is using something like the 1 day and the 4 hour. And they're getting the key levels of possibly being oversold, but you need to understand they can kind of range in these areas for a decent amount of time. So when you're looking at RSI, get off the 1, 3, 5, 15, 1 hour, and even 4 hour. Use the daily, use the weekly, because anything besides that is just going to be an absolute waste. And in my opinion, you're just wasting your time here because it's not taking into account the most important indicator of all, which is what? It is volume. Volume tells you if people are buying, volume tells you if people are selling. That's why it's so important there. So we looked at Nasdaq and it still looks strong. We still are anticipating that target of 13.5. ES, what's going on here? Now, ES was very interesting as well. So something that was interesting going into Friday we need to highlight is on Friday, if we look at NQ, you made those lower lows and lower highs. But something that happened with specifically this S&P 500 futures, ES, you were making lower highs the entire day. Yes, the entire day you were making lower highs. And I'm going to get into Bookmap here in a second as well, but you end up trying to break out of this wedge as well, this little pin that you had, right? So you're actually getting out of that pennant as well near the end of the day. You're coming right back into this key range of support as well. So you're coming right back to this key level where you were holding the entire time, which in my opinion, this is the range. If you get above these previous highs that you had, you are bullish once again. And one thing to mention all week was ES was moving a lot weaker to something like NQ. So looking at ES here, you can see how you were really, if you look here, you're very choppy. You're back and forth, no major upside. Looking at NQ, what happened here? In my opinion, before Friday, it was nothing but upside. And Friday just established that bulls, in my opinion, are still in control. So you see a lot more upside here on NQ. You go back to ES, which is S&P futures versus the Nasdaq. You can see S&P looks a lot weaker, in my opinion, and a lot more stagnated, right? So that's what I'm looking at here specifically on ES. So looking at ES, the thing that I like here was at the end of the day and on Friday, you finally started getting good movement. And it was better actually than the Nasdaq. So these are all things that I like going into next week. So looking at S&P, looking at ES, you still look good. Now, does that mean you can't turn bearish? No. I believe Wednesday will be a pretty big day for the market, so I'd be watching. What I'm watching is Nasdaq specifically. You want to see 13 hold and 13,000. Before I go any further, I want to give a special shout out to Hanka Trade. This is who I am currently using when I'm trading futures in the after hours or anything like that. You already know where I do my Bitcoin trading, and now this is where I do my future trading using Bitcoin as well. You can trade the NAS and the SPX basically 24/5 using their platform. And when you're looking at account types to be using, the one I'm using is going to be the ECN Plus. I'll explain why, because I'm going to be doing a $1,000 challenge here on the channel, as well as most likely the new channel as well. So you can follow me along using the platform, learn how to use it as well if you're interested in using anything like this. And a key reason that I'm using Hanka Trade specifically is because one, they're going to use my base currency. Two, if I ever want to do something like Forex as well, when it pairs well with something the way that the economy is moving, I can also use them for that. But it's also going to be very minimal when it comes down to these commissions, which can rack up. They're also going to give you the capability to go to max leverage. Now, I'm never going up to 500, but I am leveraging my money specifically on futures. And when it comes to trading any type of Forex or anything like that, based on what I'm trading and how my style performs. And just so you know, they are also running a bonus, giving you a 100% deposit bonus on whatever you're using. You can always withdraw your initial deposit, but you need to look at the actual rules for depositing the 100% bonus when you are trading it, because there are certain rules that apply as well. But they have a lot of promotions going on, so I would definitely be checking them out right now, because this is how you can trade some of the futures that I'm talking about here in the video. Because if these two levels end up holding, you have to remain bullish. But again, if you get below them, then you could come into question saying maybe you're getting reversal and things like that. Also be watching that monthly level right here, the red line. If you don't have it on your chart, I recommend getting it on there. The monthly is definitely going to help you as well establish key ranges to be watching as well, and very big influential pivot points on the market as well. So overall, that's what we're looking at here. That's what we like to see. So I want to see more upside here. But I want to go a little bit more into some of the fundamentals and things that I'm looking at as well that still are giving me more upside pressure on a fundamental viewpoint as well. So we've talked a lot about junk bonds, yields, and things like that. We're going to get into that here in a second, but what I want to do is show you really quick on Bookmap. So when we're looking at Bookmap, basically what Bookmap is doing is showing us an overall heat map of what's going on with the stock market. That's all it's doing. It's showing you basically where buyers and sellers are, just so you have a visual color painted picture. It's perfect for people that are watching on YouTube, because people usually like things to be really simple. So basically when you go from black to red, closer you are to red, which means there's more buyers there, there's more overall volume, which you're gonna hear me talk about volume a lot here on the channel. As we look here, Monday or Friday morning, you didn't have that much volume or that many key levels being attacked, if you will, or overall areas where there was resistance. It was just nothing but buyers on the market, no sellers really. And then you started chopping back and forth, making that ascending overall channel that we were forming in, right? And you can also see CVD, which represents our buyers on the market, definitely dominating the market all day long once again, shortly after that immediate dip we had this morning. So you can see we actually went red here on CVD, and then you eventually bounced back. One thing I do want to mention, that there wasn't any hidden orders, not too many icebergs until the end of the day, which you started seeing those definitely start to heat up. Now, they did go in both directions, but I will say more were inside of the bullish theory. So that definitely leaves me inclined to believe that we have more upside coming. So looking at Bookmap, looking at the heat map, you can see we were attacking those levels continuously and breaking into higher ranges again and again and again. Now, the key part that I was looking at, and I mentioned this before in some of the videos, was on Cheddar Flow. Now, when we look at Cheddar Flow, I have to be completely honest with you. When we look at the put to call ratio, it definitely looks like it's in favor of puts. So we can see it's a 2.1 on, it's a SPY. Yeah, it's on SPY. So you're 2.1. So that means for every call, every contract that's a call, there is 2 puts, theoretically. Now, although that number is true, when we go to premium and look at the actual size of these contracts, the biggest orders are still in which direction? Towards the call side. You have one major 1.4 million, a 1 million contract, and a few smaller under a million. You see all these bigger orders are definitely in favor of the call side right now. Now, do these options mean that the markets should go in that direction? No, it is not. But I'm just inclined to show you key levels that you have to be watching and different indicators and things you can look at the market that are definitely pointing you in a direction, if you will. So I do not believe the upside is canceled, and I still think we're going to hit our target of 13.5. I could be wrong, but that's just my opinion right now. Looking at Qs, again, this is a little bit of a different story. If we look at Qs, they're definitely hedging. This is as far as Nasdaq. Qs represent the Nasdaq. SPY represents ES. Qs definitely have a lot more put volume, but we've also talked about this. They are hedging their positions, it looks like, with Qs and overall VIX, and then they're going long with something like SPY and maybe stock positions that they're looking at. That's what I've been seeing, and we've been tracking over the past week if you've been watching the videos. Now, if we look at VIX, you can also see the story is telling us the same thing. VIX is continuously, it's in this channel towards the downside. Will it eventually break back up? Yes. However, it looks like there's more downside to come. VIX is getting slaughtered. So we know when VIX is coming down, what is happening? The market typically is bouncing. For instance, if you go back and look, what happened right here down at June 10th, where were we on the overall markets? Let's go really quickly back to NQ and look. So if we go back to NQ, the Nasdaq, and look where we were June 10th, let's just see really quick. Where were we? Let's go back really quick. June 10th. You were right here, right before you started to break down, right here. So if we go back to VIX, you can see you had this massive move up. You were stagnating. Go back to VIX. Where were you? You were down here in the trenches and then you started coming back up. So typically you will trend down and the market will start to bounce. And then when VIX bounces, the market starts to drop. It's the volatility index, right? So what we're looking at here is you broke through some of your key levels. I do anticipate you're going to come down towards the $18, $19 range here on VIX, possibly even down to the $16 to $15 range. Now, the $16 to $15 range, I don't want to go too much into this, but every time you hit the $15 to $16 range, you have been ultimately getting a bounce on VIX for the past overall year. We go all the way back to March 2021. You can see we bounced literally for an entire 6, almost 9 months in that range. So if you come back down to that range, you have to, in my opinion, turn to a bear, but you're not there. So you still have more room to the upside here as well. Now, as we continue down this rabbit hole, as we continue looking at some of the things going on here, looking at junk bonds. Once again, I covered this yesterday, I covered this previously on the week as well. Junk bonds give you an overall look of the market if there is a risk level, if people are wanting to grab positions to bet on more upside, specifically in riskier assets, such as what? Such as tech. Qs. These are some of the bigger names there. And you were continuously, you dropped at open. It's worth mentioning. You did drop at open on Friday, but you, again, were making higher lows and wanting to push back towards the upside. And if we look here, you're still dangerously close to getting the breakout on junk bonds above 96.75. And we think we're going to 98.5 to 99. That's our overall target there. So again, junk bonds still look strong. Looking at the dollar value, what's going on here? Now, the dollar value, we knew we would start bouncing because we had our zones already marked out. There were two key areas. One right here, your previous highs, which you did get sharply, slightly below, and then you bounced right back and you started mounting. So the dollar still looks extremely strong. And in my opinion, if you look at this on a longer time frame, it's definitely another flag that you're forming, the same pattern that you've been doing for overall months now. So if you look, the dollar just continues to do the same thing before it makes higher levels over and over and over. Again, we've been talking about this for a long time here on the channel. The past 4 months, same thing, same thing, same thing. So is the dollar bouncing back? Dollar looks like it's getting strong. The dollar is maybe the only thing right now that's telling me downside's probably coming. However, we're looking at the dollar, where it's bouncing at, where it's lining up, going into CPI. It makes sense. You have CPI coming Wednesday. The dollar's getting out of its level, trying to bounce back. So Monday and Tuesday, I can see those being pretty decent days on the market. And those are the days that I'm anticipating for us to hit our target on Nasdaq. That's what I want to see. On Nasdaq, I want to see us hit our range, hit our target by Monday or Tuesday. Wednesday, I don't want to have much on the market. I'm not going to be betting on CPI. I'm not going to be doing any of that. I have no interest. That's just not what I want to do. I want to have no part in that. Now, also too, going back to yields, we covered this yesterday. Yields, they are bouncing back. The 10-year is bouncing back pretty nice. And guess where it's bouncing with? It's bouncing with the dollar. So we kind of anticipated this, but yields definitely got hit during this time more than something like the dollar. The dollar got hit, but not as bad. The 30-year yield as well, you can see it's doing the same exact thing. The 30-year yield is still wanting to climb, but it's climbing at a slower rate than the 10-year, which shows us an inversion is possible. Again, flagging once again. So again, I want to just highlight these key points. Now, I did misspeak yesterday, and I'm going to go over this before I go any further, because if I ever say anything misleading, I definitely want you guys to know that I noticed it, right? So I honestly, right here, recession, that word should not be there. I've clarified this plenty of times here in the video as well. But yes, I just want to clarify each of these different things. And, sometimes if you're new to the channel, I don't want you to get the wrong feeling about what we're doing here or anything like that. So right here, this is where we're at. Basically what this is your inversion chart from the 10 and 30 year. Now the 2 years already over the 10 year, and we've already started to see that happen. I'm seeing a lot of people DM me asking me about that. Now, when we look at the 10 to 30, this has been one of the leading indicators of a recession or a massive market pullback. Okay. So looking at what's happened now, obviously you're in that inversion range. You're at a 93, 92% right now, and you're looking like you're going to bounce back up. Going back to previous time this almost happened, going back to 2018 with Trump. If you do not know, the stock market basically dropped 10% in one day roughly, and it was a pretty nasty overall session. But I believe it was like shortly after Hurricane Harvey. That's the only way that I remember it, just because I'm in Texas. So looking at what's happening here, I don't know if Harvey was in 19 or 18. I honestly can't remember. But looking at that, this was a key overall moment. Now, there were certain things with monetary policy that prevented us from going into a recession during that time. And that's why, in my opinion, when the COVID crash hit in 2020, that's why it was so nasty, was because we were already in a period trying to save what we were doing for the past year with monetary policy and fixing key things. And then you had COVID hit, which was just deteriorating to the market, which definitely hurt us and put us in a bad situation, which again, if you look, yield started rising at the fastest rate possibly ever. So this is your yield inversion. We can go to look at the 10-year and the 30-year, but they rose very fast. And that was because they had to start rate hiking. That's because inflation was getting out of control, right? So if you look, that's what we can also see based on monetary policy that they were using here to help the market. They were kind of driving rates down, which was good. They couldn't anticipate in the crisis of COVID. That's why when you go back, you can see it was a steady decline. And right here, this is where the COVID crash happened. So you can also see that. Now, then you have your housing bubble right here. And then you had your dot-com bubble right there. And that's all the data we kind of have right now. So I just want to clarify that and make you all aware of that. Now, this is why this is so dangerous because of this. I'm not a Trump supporter. I'm not a Trump hater. I really care less about politics. But the reason why this is so dangerous is because we used a majority of all of our tools right here and right here during that COVID crash, because we wanted to keep the market afloat because of supply chain and everything going on there. Now we don't have the same monetary tools to ease inflation up here and to slow rates down as well. That's the problem. That's what's going on there. So as we look at what's happening here, that's my overall viewpoint on the market. That's what I'm looking at. Going into this week, I want to see Nasdaq get some more steam, and I think it can easily push back towards 13.5. That's our clear target. 13.5 is the target. That's what we're looking at. If you start to break below 13.1, then you might flip to a bearish thesis, and that's where you would get weaker on the market if you break below 13.1. If you get below 13,000, I would probably look for more downside coming in here. Specifically, I'll keep you guys updated, but until you get below 13.1 or 13,000, I am not interested in shorts. I am not interested in puts. We need to see how we react, and we need to watch the growing data coming out as we are currently even watching this video right now. Wednesday's very big, and then also keep your eyes focused on China. Have a good one.